So again, today we're going to be talking about the subject, how to avoid harmful January wash sales. And this is actually the fourth in a series of webinars we've been holding over the last about 6 weeks about the subject of wash sales. Our first webinar, we talked about wash sales in general and how they affect active traders. Then we talked about how to or what to watch in December when it comes to wash sales. Our last webinar, we talked about IRA wash sales. Today we're going to talk about January wash sales. January is just a few days away, and so there's some important things to understand about wash sales and how they can affect you in the month of January, particularly the harmful effects, and that's what we're going to talk about today. Just a quick reminder that the information we're providing is for educational and informational purposes only, so we're not making any tax, financial, or legal advice. And all the information we present today may not be suitable for everyone. So you might need to consult with your tax advisor about your particular situation. My name is Jason Derbyshire, and I'm the Education Director here at TradeLog Software, and we've been producing IRS-ready tax reporting for traders, including wash sale adjustments, since 1999. At the end of our presentation, I'll point out some of the resources available at TradeLogSoftware.com, where you can learn more about the software as well as some of the resources we have for wash sales. So what we're going to talk about today is why January is an important month for monitoring the effects of wash sales. Traditionally, we say to be concerned about wash sales in December and January. Those are the 2 months of the year when wash sales are most likely to have a negative effect on your capital gains and losses. And so we want to talk today about the month of January. And it'll probably be a little bit quicker presentation than some of our other events because it's fairly straightforward what you need to keep an eye on in January. But it's important to understand this before the month begins. So we're going to talk about how the wash sales in January can be potentially harmful. And I'm also going to show you in TradeLog how you can use some of the reporting in TradeLog to help you monitor and assess the situations with your trading and be able to make decisions accordingly. So first, let's answer this question: how may January wash sales affect you? If you've joined us with our other events talking about wash sales, we reiterate over and over the fact that for most active traders, wash sales are inevitable. You're going to have wash sales throughout the year. Many of those really don't affect your bottom line. But trades in January may trigger a wash sale from the month of December, causing a loss that occurred in December to be deferred to the next tax year. So what happens then is the loss that occurred last year in December is now deferred. It can't be realized in that year, and that can be potentially bad. Not always, but sometimes it can. And the other thing is, since the tax year is over, we're talking about being in January, you can't undo that effect. You can't make another trade and try to change the results because the past tax year is over. So here on the screen you see just a really simple example taken from a wash sale report from TradeLog. You'll notice the first line in this example, we have a round trip trade 500 shares of our fictional XYZ stock sold for $25,000, but the cost was $27,500. So we had a loss of $2,500 that occurred on December 4th. So let's say that within 30 days, in January of 2015, on January 2nd, we purchase another 500 shares of our fictional stock. That purchase, because it's within the 30-day wash sale window, will trigger a wash sale on that loss that occurred in December. And so what's going to happen is that $2,500 in December, the loss on December 4th, it cannot be realized in the 2014 tax year because that loss is adjusted and moved forward to the cost basis of the shares purchased on January 2nd. So in this case, I have a $2,500 loss that actually happened on December 4th, but is not realized until I finally dispose of or sell the shares I purchased on January 2nd. So this could be good or bad depending on the situation, but the point is I can't undo this. The wash sale adjustment's made. the original loss was in December, it's been deferred from that tax year, and there's nothing I can do to change that. So this is why when we talk about January wash sales, it requires us to be attentive to what could potentially happen when we open a position, and to make sure that we don't buy something or open a position that is going to create a harmful wash sale. And so what we want to take a minute and talk about is when wash sale effects really hurt. And we talked about this in one of our previous events as well, when we talked about December wash sales, and it's important to reiterate this again, because not all wash sale deferrals are bad. Here we have two examples. Notice in example A, say that you have an actual loss for the tax year of $13,000, but wash sale deferrals cause you to defer $10,000 of those losses to the next tax year. So let's say that we have some January trades. It defers $10,000 of losses. Well, I still have a $3,000 taxable loss for the 2014 tax year. And because we have the limits on what we can claim in capital losses, we're at that limit, so that's not too bad. Those wash sale deferrals just mean we get to move some of those losses forward to the next tax year. So in example A, that's not necessarily a bad thing to have those wash sale deferrals. Example B is a little bit different situation. Say that we have a gain of $10,000 for the tax year, and we have $5,000 in wash sale deferrals that occur. So again, perhaps I make trades in January, I defer some of those losses. That could push my taxable gain up to $15,000. However, in example B, you'll notice we have a capital loss carryover. So you may have a carryover from previous tax years of capital losses that were beyond the allowable limits. In this case, we have a $20,000 carryover. So that means we still, we can apply that to offset the gains for the year, and we still have a taxable loss of $5,000 for the tax year. So again, in this example, example B, that $5,000 wash sale deferral doesn't really hurt us. But let's look at when wash sale effects do hurt. Here on this slide, you'll notice that example A, we have, again, an actual loss of $13,000. But in this example, notice the wash sale deferrals are more than our actual losses. So we defer $25,000 to the next tax year. What that means is that offset equals a taxable gain of $12,000. This is harmful because you actually lost $13,000, but you have a taxable gain that you have to pay taxes on of $12,000. Why? Because $25,000 in losses were deferred to the next tax year. So that would be a situation where you would want to avoid making a wash sale deferral that's going to cause you to be what I like to call upside down, where you're having to pay taxes when you actually lost money. Example B is another situation. Say that we had an actual gain for the year. So maybe you've been profitable for the year. Well, if you have a gain, then any wash sale deferrals are only going to increase that gain because you're going to be deferring some of the losses. So overall, for 2014, you might have made $10,000. But maybe you make a trade in January, it triggers a wash sale, $5,000 in losses that occurred in December are now moved forward to the next tax year. Now you're going to have a tax accountability of $15,000. So in both of these cases, we see that the problem is wash sales have caused us to defer losses and increase taxable gain. And that's usually when wash sales can be most harmful. And so you can see in this the importance of understanding where you actually stand, your gains and losses, and how the wash sales are affecting you or could affect you if they occur. Now, a reminder as well, when we talk about the wash sale effects, it's important to remember some things about what brokers report for wash sales, because 1099-B reporting by brokers does not require them to adjust all of the wash sales that you may be required to account for. For example, brokers only have to report wash sales on identical CUSIP trades within the same account. But you as a taxpayer are responsible for identifying and reporting additional wash sales beyond the 1099-B. So if you trade stocks and options, for example, or options on the same stock, then you may have wash sale adjustments between stocks and options. Brokers are not required to adjust those. Even though in 2014 they're going to be reporting options on the 1099-B, they're still not required to make those wash sales between stocks and options because they can be considered different CUSIPs. But you are. The other thing is multiple brokerage accounts. A lot of active traders have multiple brokerage accounts, or your spouse may have an account, a separate account. Well, you are required to adjust wash sales across those accounts. And then also, as we talked about in a previous session, IRA wash sales can come into play. So it's important that you understand that even though your broker, you might be looking at their reporting, they may not show any wash sale, or there might not appear to be any wash sale that's going to affect you. You might have situations that could be an additional wash sale beyond what the broker has reported. And so particularly, we think about with January trades, for example, we think about stocks and options. You could have had a loss on a stock position in December, and maybe now you decide, well, I'm not going to touch that stock because I don't want to have a wash sale. But you need to be mindful of options as well, because if you go and open a qualified option position, that could trigger a wash sale on the stock, or vice versa. So you need to be aware of those rules, and we discussed those more in the first webinar in this series. So if you're just joining us and you haven't gotten some of that other information we discussed about wash sales, I encourage you to check that out. I'll show you later where you can find that on our website, because we explain a lot more about the rules with wash sales and what triggers wash sales and all of that nitty-gritty. But let's get back kind of on track on our main subject here, how to avoid January wash sales. So we're talking about a wash sale that occurs because you opened a position in January and there was a loss in December, and so that new position in January has deferred the loss. So there's a few things, 3 key things that you need to do in order to avoid any harmful January wash sale results. Number 1 is know where you stand with taxable gains and losses. It's important that as you come to the end of the year that you understand the big picture. Do you have a net gain or a net loss for the year? And then understand how wash sales might affect that. Because again, you may have a situation where wash sales won't hurt you, and you could do all the trading you want, make all the wash sales you want, and it's not going to hurt you. But you need to understand that. And then that goes in line with the second point. Understand potential wash sale situations. So you need to know in the month of January what securities are high risk for me. Maybe you had a large loss in a particular security in December. You need to know when that happened, how many shares were involved, so that you could make decisions accordingly and try to avoid having something that's going to be bad. And that goes into point number 3. Avoid opening positions that could trigger a January wash sale if it's harmful. And we put that in italics because, again, this doesn't mean stop trading in January. When you understand points 1 and points 2, well, now you can make a decision on whether or not it's going to hurt you to open up that position. And TradeLog has reporting that can help you with these objectives. And that's kind of what I want to spend the bulk of the rest of our time today discussing, some of the reports in TradeLog and how you can use them. So first of all, let's talk about that first objective. You can use TradeLog to determine your taxable gains and losses. Now, some key things to keep in mind, because you need to look at accurate G&L reporting. Just like we talked about your broker, if you look at maybe a G&L report that your broker provides, it may not reflect everything. It might only be one account. So what you need to do with TradeLog is make sure that you're tracking all of the accounts that need to be tracked. That way wash sale adjustments can be made across accounts. You want to make sure that your imported trade history is up to date. So we're coming down just a few days left in December. If you're using TradeLog, you need to make sure you have all of the 2014 trade history imported and everything's up to date and reconciled or verified. That way you're getting a clear picture of your gain and loss reporting. If you trade options, You want to make sure you've expired any options that are still open past expiration, that you make any adjustments for exercise and assigned options, because those types of adjustments can also affect your gain and loss reporting. And then what we encourage you to do is verify your open positions with the last statement for the tax year. So once December is over, you've imported all of your trades to the end of December, go ahead and get your December statement once it's available from your broker. Verify the open positions at year end. Make sure everything balances. And then you pretty much know where you stand with your gain and loss reporting. Plus, it's going to make your tax reporting a whole lot simpler when you are finally ready to do your final tax reporting. And just a tip, the things that I just talked about, in our 8-step quick start guide, these are steps 1 through 4. So what I'm going to do is I'm going to open up TradeLog now. And I have a sample file here, a demonstration file. First thing I want to show you is what I just mentioned, the 8 steps in our quick start guide. You can find that in the software by simply go to the help menu and click on getting started quickly. That's the best way. And that's going to take you straight to this page in our user guide. And you'll notice there are 8 key steps there. So you can see those 8 steps. Steps 1 through 4 is what you can do if you're using TradeLog. At the end of December, you can complete those 4 steps, and now you're able to get accurate gain and loss reporting. So especially those of you who are new TradeLog users, these are the 4 steps you want to complete. But the same 4 steps apply no matter how many years you've been using TradeLog. These steps apply to basically every tax year. So we encourage you to make sure and follow those instructions if you're not familiar with how to use TradeLog exactly. So here in this demonstration file I have, this trader has 2 different accounts, 2 different brokerage accounts. So you'll notice that I've imported the trade history on these accounts. The first account, the last trade date was December 26th. The second account, the last trade date was December 23rd. And this is actually the last trading that has been done in these accounts for the tax year. So now that I've imported that, I want to make sure if I have options trades that I go ahead and expire any options positions. As I mentioned, adjust for exercise assigned. If you're not sure what I'm talking about or how to do that, again, the instructions in our quick start guide will tell you how to do that. But now, once I've got everything up to date, how do I get my gain and loss reporting? Well, one thing you want to make sure to do is if you do have multiple accounts, that you run your gain and loss reporting from the All Accounts tab. That's going to give you a combined view, and it's going to make sure and adjust for wash sales across accounts. So that's very important for your tax reporting, and at this point for looking at gain and loss reporting. Now under the Reports menu, under the tax reports, you have the Form 8949, which is the actual tax report, and that will give you your gain and loss. But what I recommend for this type of analysis that we're doing, use the gains and losses report, which can also be used with state Schedule D filing. This report provides a lot more detail than the Form 8949, and so if you do have questions or you're trying to understand something, it's a lot easier to analyze the gain and loss report. So I'm going to click on the gains and losses report, and everything should be set by default for the options, the start and end date. We're going to adjust for wash sales. So I'm just going to go ahead and click the Run Report button. And what this is going to do is give me my gains and loss reporting. You can scroll through and you'll see all of the trades that occurred. You'll see the wash sale adjustments that have been made throughout the year. What we're concerned about when it comes to looking at January wash sales is we want to understand our bottom line. We want to understand where we stand with our taxable gains and losses. So the easiest way to do that, you can actually go to the last page of each section of this report. There's a section for short term and a section for long term. But we actually have a summary bar on the window here. And so at the bottom you can see this gray bar at the bottom of the window, and I know for some of you it might be a little hard, might be some small print to see on this screen. But here at the gray bar at the bottom, it gives us kind of a snapshot of where we stand. You'll notice on the far right, it gives the actual gains and losses. So for this particular trader, in both accounts, he's actually gone ahead and he's had a total loss of 77,000 for basically $77,500. And so we see that is what he actually lost in these two accounts for this tax year. But we see another key column, which is the taxable gain and loss, and that's located right in the center. In fact, I'm going to turn the little spotlight on. This might help some of you to see it. I'll put my cursor on it in red. The taxable gain and loss column, this is showing me after all the wash sale adjustments and everything's been accounted for, this is what the taxable gain and loss is going to be. So you notice for this trader, that taxable gain and loss is $111,000 plus dollars. So he lost $77,000, but he has a taxable accountability of $111,000, so quite a large amount. Now, one of the little side points, this is kind of a good example to show. You might say, well, how do you get from $77,000 to $111,000? Well, we do have a wash sale deferral column. For this particular trader, he's deferring $7,400 currently in wash sales. So if he doesn't make any more trades for the end of the year, he's going to have $7,400 that are deferred to the next tax year. That should actually increase his tax accountability, so it should bump the taxable gain and loss to like $70,000. But what you don't see on this summary bar is that this trader had wash sales from the previous tax year. And so that's why we have such a big difference. This particular trader has a very large amount of wash sale adjustments that came from 2013 tax year into 2014 because he had some really large losses, and so he's slowly kind of whittling those away. So let's take a look at this then and think about what we talked about. Will a January wash sale be harmful for this particular trader? Well, as you see, he has tons of losses. So even if he was to have more wash sale deferrals, he would have to have over $100,000 in wash sale deferrals at this point in order to put him upside down, in order to result in having taxable gains instead of the actual losses. So for this particular trader, he probably doesn't even need to worry about wash sales in January. This probably sounds bad, but he really should just worry about being profitable in his trading for the month of January. That should be the focus. So this is the value of looking at your gain and loss reporting and seeing where you stand, because sometimes what we see is traders that are really obsessed about and worried about wash sales, when bottom line is they don't even need to be worried. They have other things they should be worried about. And that's the case for this particular trader. Unless he has some really large wash sale deferrals, new wash sale deferrals that could occur, he probably doesn't have to worry. He's got lots of losses, so he's not going to be paying taxes that he shouldn't have to pay. So that's where this reporting can help you out. Now, on the other hand, you might see where you have a taxable gain already. And if you have a taxable gain, well, more wash sale deferrals are going to bump that gain higher and higher. And so that's where you might be concerned about new wash sales in January. Or you might have losses that are real low. They're real close to turning into a gain. And so again, those are the situations you need to look at. And you can review what we talked about earlier in the replay, and that'll help you if you're not certain about your situation or whether you should be concerned about wash sales or not, or new wash sales. So that's the gain and loss reporting that you can use to really understand where you stand with your taxable gains and losses at the end of the year. I'm going to go ahead and close out of that now and switch back over to our presentation for a minute. And let's talk about our second objective. Once we understand where we stand with our gains and losses, what we want to do next is use TradeLog to understand potential wash sale situations, especially if you do need to be concerned. Like I said, the trader with this particular demonstration file we're looking at, he probably doesn't even need to worry about wash sales. But nonetheless, we're going to talk about how to look at potential wash sale situations. And you can do this in TradeLog using a couple of tools. The wash sale detail report can help you out. The potential wash sales report is what we're going to especially focus on for when it comes to January trades. So I'm going to switch back over to TradeLog now, and I'm going to show you these two reports. First, I'm going to show the wash sale details report, and you can find this under the reports menu. Again, make sure that you're running this from the All Accounts tab in TradeLog. That way it's accounting for all wash sales across all accounts. So I can run the wash sale detail report. It's going to take just a moment. TradeLog generates the report. Here we see a summary on the first page. And what this summary page does is it shows me some key information of wash sales that are already affecting me. Notice on the left side here we see attached to year-end open positions. Let me turn my spotlight on again. So attached to year-end open positions. So in this particular sample file, this trader has $7,400 of wash sales that are attached to positions that are currently open. So if those remain open, those losses are going to be deferred to the next tax year. To understand that more, you want to watch the webinar we had about December wash sales and how year-end open positions can affect you. This report also has a section that shows you wash sales attached to January trades. We're not in January yet, so there's nothing to be reported here. Once I've imported January trade history, if there are any new wash sale deferrals because of January trades, those will be listed here. But here's the little thing to take note of with this report. When it comes to January trades, this is after the fact. So if you see wash sales attached to January trades listed on your wash sale detail report, there's not much you can do about that because you've already made the trade in January. You can't go back in time and undo that. So this report is helpful really at showing you what's already happened and how wash sales are affecting your taxable gains and losses. And you can scroll through this report. Let me scroll down here. You can scroll through it and you can see all the details in the subsequent pages that are in relation to the summary. So these are all the trades that are causing what we saw on the first page, the deferrals. And you can see all that detail. So I just wanted to show you that report, but really when we think about avoiding harmful January wash sales, this report, like I said, doesn't help you avoid any. It kind of just shows you what's already happened. But I did want to show you this report because it is one of the tools. The report that you really want to understand if you're looking at your trades in January is the potential wash sales report. So under the reports menu, again, we can only run this from the All Accounts tab. We have the potential wash sales report. So I run that report, and this report gives you a little bit different format. There are 3 sections to the report. Section 1 deals with wash sales attached to open positions. So again, that's in relation to decisions we make in the month of December and whether we need to close out any positions. We're not going to talk about that section because we explained how to use that in the webinar we had about December wash sales. Section 2 is losses that may be disallowed by new trades. That's the section that we're going to focus on. I'll come back to in just a moment. I just want to mention Section 3 deals with wash sales lost to IRA accounts. So we explained this particular section in the webinar we had about IRA wash sales. So you can check that out if you need to learn more about that. But we want to focus for a few minutes here on Section 2, losses that may be disallowed by new trades. So let me explain what we're seeing in this section of the report. TradeLog is looking at trades that have occurred in the last 30 days. So it's looking at today's date, and it's looking at the trade history in my file for the last 30 days. And what it's looking for are any losses that have occurred that have not already been adjusted because of a wash sale. And that's what we see reported here. So for example, the first line we see here, we see ticker, we have Amazon, 100 shares short. The loss occurred on December 2nd. Let me turn my spotlight back on. So December 2nd, I had a loss that resulted from a short sale that closed on Amazon. The loss was $160. There have been no other wash sale adjustments because I haven't had other trades on Amazon. So what this means then is if I open another qualified position on Amazon within that 30-day window, I can trigger a wash sale, and that $160 may be deferred to the next tax year. So particularly, you'll notice here we have a column with the 30 days. So the 30-day window ends on January 1st. So if I have another trade on Amazon that could trigger a wash sale, if I make any trade before up to January 1st, then I'm going to have a wash sale. So that's what this report is helping me to see. What securities are at most risk? What I tend to do is I look at the ones with the highest dollar amounts. For example, the second ticker, BIIB. So we have 100 shares that were closed. It was a long position. These were closed at a loss of $3,600 on December 23rd. So if I buy more shares of that ticker on or before January 22nd, I'm going to have a wash sale deferral. It could be as much as $3,600 in loss that could be deferred. It would be dependent on how many shares I open. If I buy another 100 shares, for example, that'll create a complete wash sale of $3,600. And that's going to defer that amount to the next tax year if that trade is in January. We see there's some option positions, several options on IWM that were closed, and so we see the date range for that. So I could open another option position, or even if I have shares of stock on IWM, that could trigger a wash sale as well. So this is the report you want to look at if you have a gain and loss situation where you need to be concerned about wash sales. This is the report that's going to help you know which securities did you have losses on during the month of December that you maybe want to think twice about before you open new positions in January. This is going to help you have that information. What I love about this report is it gives you the 30-day window, so you know, okay, I have until January 10th, for example. Once January 10th is over, okay, well now I can maybe look at trading IWM again if I'm trying to not create new wash sales. We also give you other critical information here, like how many shares, whether it was a long or short position. In a moment I'll talk about why that could be important. Now I'll point out, you see there is the blue link on this report. Click here for additional information. You can click on that link and it'll take you to our user guide, and it'll explain this in a little more detail as well. So if you're looking at the report and you can't remember, what did he say about this? Go ahead and click on that link, and the user guide will explain what you see being reported and help you understand how this information might affect you in your decisions. So this is a really good report, and this is the key report that you want to look at in the month of January. And as I mentioned, what you might want to do, you import all your trades at the end of December. Everything's verified and checks out. You might want to run this report just to see, okay, where do I stand? And then couple that with the information that we talked about, your taxable gain and loss, your bottom line, then you can start making good decisions about what kind of trading you need to do or not do. You might need to avoid certain securities. And this is good too, because as I've talked about in the other events that we've had on wash sales, some people get overly paranoid. Maybe they think, well, I shouldn't trade at all for the month of January. But this helps you see exactly which tickers are at risk. So even if you do need to be concerned about January wash sales, you might be able to just avoid a particular security and then be able to continue trading successfully and make some money on other stocks and options. Now I'm going to switch back over to our presentation here and go to the third objective we talked about. We talk about how to avoid harmful January wash sales. So using the information we just discussed, knowing your bottom line gains and losses, knowing which positions could potentially trigger a wash sale, now the third objective is close positions if necessary. Oh, excuse me. Something's a little out of whack here. I'm just going to skip this slide. I think that something got mixed in from something else. I thought that didn't sound right. Just ignore what I said. Our next objective would be to avoid new wash sales if harmful. Threw me off for a moment there. So you know your situation, and now you can decide whether or not opening a new position is going to hurt you. Will it trigger a wash sale, and will the result of that wash sale be bad? And the information we talked about, the potential wash sale report, can help you decide that. Also, one of the things that comes up is people often say, well, I sold stock at a loss, so what sort of position could trigger a new wash sale? That's an excellent question. And so we have a chart on our website that you can go to, that you can learn more about wash sales and see what the triggers are, and I'll show you where to find that here in just a moment. Also, you want to remember that not all wash sales are bad. And so, for example, I'm going to go back to the situation in TradeLog here that we were looking at. With this particular trader, keep in mind he has a net taxable loss right now of like $111,000, which is way more than the IRS cap on capital losses that he can claim. So it actually wouldn't hurt for him to maybe create new wash sales. So he might actually look at this report and say, well, you know what? I've got some large losses in December. Why don't I go ahead and buy new shares in January and create a wash sale, and that'll help to push that loss into the next year. And there can be tax advantages that sometimes, instead of having a large carryover amount, pushing that into the next tax year can be beneficial. And so that's a strategy that can be used as well. So remember, they're not always bad. You just need to look at the situation. And one of the things too is, if you're not sure, you may need to seek professional help. If you're worried about your situation, maybe you are upside down in your gains and losses, you're going to owe taxes when you actually had losses, you might want to reach out to a professional trader tax advisor who can help you with your situation. So what I'm going to do is show you in a moment some resources that can help with that. But going back to our presentation, just to kind of recap 3 key takeaways of what to watch in January. Number 1, know where you stand with your taxable gains and losses. So as the month of December comes to an end, if you're using TradeLog, you want to make sure and import all of your trade history, get everything up to date in all of your accounts, make sure and make any adjustments if there are corporate actions, option adjustments that need to be made. Handle all of that so that you can look and see where you stand with your gains and losses at the end of December. Then you want to understand potential wash sale situations, and you do that primarily with the potential wash sale report. And that's going to help you see where the risks are, which securities might trigger a new wash sale that could be harmful. And if there is the potential for a harmful wash sale, you can avoid it. Using that information, you can make decisions on what securities you're going to trade or not trade, maybe certain quantities, whatever you want to do. You can get real technical with it. You can get real general. The key is you got to use the information based on your situation. And again, remember, not all wash sales are bad, so make sure you understand how wash sales are affecting you and may affect you with new trades, and then make educated decisions accordingly. So as I mentioned, we have resources on our website that can help. And so at TradeLogSoftware.com, you can go to the resources section. I'm going to show you that in just a minute. We have our guide to wash sales. We also have our TradeLog blog, where we have some different articles about particular wash sale situations. And then, of course, we have webinars on managing wash sales, and I'm going to show you how you can find some of the information about that. So what I'm going to do right now is switch over here to the TradeLog website. Here we are. Pull that up. Okay, so you should see right now the website, TradeLogSoftware.com. So one of the key sections you want to check out is the resources section. If you have questions about wash sales and some of what we talked about, you can go to the resources section, or you can go straight to the subtopic IRS wash sale rule. And this is our guide to the wash sales and the IRS wash sale rule. Very comprehensive guide, lots of information here about wash sales. What I want to point out at the top under the contents is a few things you can jump to. First of all, I mentioned the chart of wash sale triggers. You'll see that listed here in the contents. If I click on that, this chart can be helpful because, again, say we have a situation where you sold stock at a loss in the last, maybe in December, and now you're wondering, oh, well, what sort of positions in January would trigger a wash sale on that? Well, that's the top left box in this chart. If you buy stock, sell it at a loss, notice within 30 days, if you buy stock or if you buy a call, those two types of trades on the same underlying position would trigger a wash sale. If you do a short sale or you sell a call or you buy a put or you sell a put, those aren't going to trigger a wash sale. So this chart can help you if you're not real familiar with the wash sale triggers. This could be something you can refer to and say, okay, what can I do and what should I not do? For example, when you start getting into short selling, if you typically if you short sell a position, you sell short whether it be stock or you're selling a call or you're selling a put, then just about any type of trade on the same underlying security could trigger a wash sale because of some of the rules involved. So this chart can help you, using the potential wash sale report we talked about, see what types of trades could trigger a wash sale. So if you're thinking, well, I still want to trade that stock, but I just don't want to make a wash sale, here's the options. You may be able to trade something on that security using this. So that chart's a good resource. Also, we have under examples and advice, again, how to avoid wash sales. This talks a little bit about some of the strategies we just discussed. Also, effect on active traders. This is some good information that we kind of touched on here today, when you should be worried about wash sales, when they can really hurt you. So this is a great guide to check out. I also want to mention, we talked about our webinars. You can actually find this right now under the support menu. You can find webinars. And here you'll find a list of any upcoming sessions. This is the last session we have scheduled for this year. We will be putting up some webinars for January very soon. But you'll notice the archive listed right underneath that. You can go to some of the archived webinars. There's the last one on IRA wash sales, watching wash sales in December, wash sales 101. So if wash sales are a new topic and you have a lot of questions, you might want to check out Wash Sales 101 for active traders. That's a really good webinar that we had to help you understand wash sales. So you can check out those videos. Just click on the link and it'll take you to the video recording and you can learn more. The other thing I mentioned that I want to point out, a lot of times people ask, well, do you recommend a CPA, or I think I need help. And here at TradeLog, we do provide support mainly for the software. We can provide some general information like we're doing today, but we really can't give you tax advice on your specific situation. So if you're looking at your situation, you're thinking, wow, I think I might have a problem or I need to do something. We do have accounting service providers, and you can find that under the support menu. And these are approved service providers that use TradeLog software. Particularly Green NFH is a very well-known trader tax firm that we recommend if you need to talk to a CPA. They have CPAs that can really give you the advice you need. We also have TNT Accounting, which provides more of a bookkeeping type of service just using TradeLog. So if using the software is beyond you and your technical abilities and you need help, TNT is a service that can basically do the trade accounting aspect for you and then provide you the reports that you need, and then you can make decisions accordingly. So you can check that out if that is something that you need. And of course, if you want to learn more about TradeLog, you can go to the features section or to our homepage, and you can learn more about the software. And pretty soon we're actually going to have some new content launched, a more updated website, and you can better navigate that even on your mobile device, learn more about TradeLog, its features, and see the pricing. All of that's available there online. All right, so that pretty much brings us to an end of our presentation today. As I said, it's a little bit shorter than what we had before. There we go. There's our slide. I'll keep this up, our resources slide. So these, TradeLogSoftware.com, that's the website. You can check it out if you haven't yet been to our website. And as I mentioned, This is the last in a series of webinars, so some of the things we talked about, if you said, whoa, I didn't understand that, well, you might want to go back and check out some of our other recordings of our previous webinars where we explain more about wash sales and how they affect active traders. So that's going to bring us to an end of our session today. I'm glad everyone could join us. I think I've answered most all the questions that we've had so far as well. So we look forward, if you do have more questions, you can reach out to us and contact us via our website, and we'll be happy to try to help you understand wash sales and how to use TradeLog. So thank you all very much. Hope you have a great end of the year here, and we look forward to seeing you in our upcoming webinar events in the new year. Thanks again, and have a good night.